I'm not saying that there's not going to be a market correction. I'm saying that that market correction is not going to be in 2022, and I don't think it's going to be in 2023, and it possibly might even be further out than 2024, but I think it's likely to be 2024 or 2025 before we actually see these numbers come into play, and you're going to understand why right now. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, I want to talk to you about the number one reason we are not going to have a market crash in the real estate market right now. Now, I've done a couple lives on this. I've done some interviews with my buddy Mike Fritz, who does a lot of investing in the real estate markets for the multifamily units. I've talked to Mike Wolf, who does single family homes. And I've been digging into this more and more and more. And what I keep coming to is that there seems to be this unlocking of the correlation of what normal traditional personal finance typically leads people to believe what the markets will do. Because, like, let's think about it. Actually, you know what? Now that I say this, what I want to do is I want to get my whiteboard. Hold on one second. So what I want to do is I want to show you first and foremost why this kind of happens in the market. So typically, the rule of thumb is, back in December, we had interest rates in December. We had interest rates, mortgage rates of around 3%, right? So when you look at December with interest rates at 3%, that would lead you to think that, hey, things are good. But right now, we're coming up to May, interest rates are 5.5% to 6%. So the question is, if I told you that this was the scenario in most markets, that's going to tell you that the market prices are going to be going down. Why is that? Because typically speaking, we have for every 1% of mortgage equals 10% of purchasing power, right? So what does that mean? That means if you could qualify for a $500,000 house at 3% and then the mortgages went to 4%, that means you lose 10% purchasing power, meaning you now only qualify for $50,000 less or 10% less of the 500,000. So you now qualify for a $400,000 house. That's the general rule of thumb. Now, the challenge is all this has been thrown out of the window. Why is that the case? Why has it been thrown out the window? Simply because the rules have changed, because the environment has changed, and what's going on around us has changed simply because the last decade has been insane, and we have such an imbalance of supply and demand. Now, what I want to do here is I want to share my screen. I want to show you a chart that I found and share this with you because I think it'll make a lot of sense, and it'll really, I think, give you comfort to realize that you have a little more time. Now, what I do want to say is I'm not saying that there's not going to be a market correction. I'm saying that that market correction is not going to be in 2022, and I don't think it's going to be in 2023, and it possibly might even be further out than 2024, but I think it's likely to be 2024 or 2025 before we actually see these numbers come into play, and you're going to understand why right now. So take a look at this. What this shows is the single family housing units actually completed. This is the new homes built, single family homes built in the United States from 1970 to 2020. And what you can see is that from 2008 through 2020, we have a 13-year period where housing units completed, new builds, were below, and we're not just talking below, we're talking about really below the 50-year averages. And mind you, this is a 50-year average including this window. So think about that. Like that is a pretty crazy number when you look at it. And so I want to take a look at this number here, right here. So I don't know, it's 80, 81, 82-ish right here where the number was low. And that's the only other year that was below almost every year in this last 13-year time frame, right? So when we think about this, we've now had a decade, 13 years, more than a decade, almost a decade and a half of new homes not being built. Our country has been growing, our population has been expanding, and I think what happened was you could see there was started to be a ramp up of building from 2019 and then ultimately in 2020. Remember, the pandemic started in 2020, right? Yet homes were still completed. Why? Because they were started before that. And so ultimately now what we're looking at is 2021, we had a really, really bad down year as far as homes completed because inflation got bad, cost of completing them are bad. I mean, You look around, they're trying to catch up for the problem right now, but now we're building them in a time where supplies and costs have gone through the roof. Lumber charges are more expensive. Basically, the cost that it takes to build every single house in America right now, with the supply chain issues that we have, in whether it's you're looking to get a washer and dryer or a refrigerator or a stove or heating units or roofing or siding or sheetrock or anything, there are supply chain issues, and the cost of lumber and everything has gone through the roof. So that is making the cost of new development go through the roof. That is also one of the indicators that is leading towards old houses, the pre-existing homes, that market being worth more money. Because when you think about it, I mean, just use common sense. If yes, a new house is more appealing, but if the cost of a new home is more expensive and it's prohibitively so, that's going to bring up the value of the houses that are currently in the market, right? It just makes sense. And so what we're doing now is we're looking at this, and I'm going to say this. The supply and demand is a massive, massive issue. So right now we have about 600,000 homes in inventory in the United States available for sale. The long-term average is about 1.6 million, 1.5 to 1.6 million. So we're about a million homes, 900,000 to a million homes lower than we need to be from a normal long-term supply and demand inventory perspective on the MLS. What does that mean? That means right now, as long as supply and demand is out of whack, prices are going to remain higher. Now, I showed you on the chart that I moved, but I showed you on that that typically speaking, we would be having a situation where prices would have to come down, because in a normal market environment, if the supply and demand issue wasn't out of whack like it is right now, that increase in interest rates would absolutely have a negative impact on housing prices. And I've been one of the biggest proponents talking about this concept for a long time, that if interest rates have to go up, which they have to eventually, that's going to bring prices down. Now, what's going to happen is we will catch up. This is the horrible part about the economy, is it's the pendulum effect, right? Right now, the pendulum swung so far in one direction where the supply is really bad, and it's the people that have the homes are in control. It's a total seller's market. The people who are looking to sell have all the power because there's fewer buyers. Mike Fritz, I had him on the channel earlier today. We did a live, and we were talking about the fact that Denver has more real estate agents, licensed real estate agents, than they actually have houses available on the MLS for sale. Think about that. So I don't know about you, if that's a tough neighborhood to be a realtor in right now. And I haven't verified that, but Mike's a pretty straightforward guy, and he wouldn't be saying it if it wasn't accurate. So whatever that statistic is, it's not good, right? Like, so that's something to be considered. Now, what I also want to say here is what's going to happen is they're going to catch up, right? That pendulum is going to swing back the other direction. When that pendulum swings back the other direction, what's going to happen is the supply is going to catch up. Interest rates are going to be higher, and ultimately they will overcompensate. The supply will pass through the barrier, and then there will be an oversupply. That's just the way these things go. And my guess is we're looking at 3 to 5 years before everything's going to be able to catch up. And that's assuming that the market and the economy and everything is going to be where it needs to be. Like, there's not another renewal of the pandemic. There's not big issues on the political or on the war front or anything of that nature. Nobody knows what's going on with Russia and Ukraine and all that stuff going on. So we always just kind of have to have our finger on the pulse and realize that this is a macro perspective. We got to look at it from the airplane view and realize how each thing affects another. But at the end of the day, the problems that we have are real right now. Inflation is real. The supply chain issues are real. Our national debt is real. The federal funds rate needs to get increased. People are losing faith in our dollar a little bit because of the irresponsible money printing that we've had. 40% of the money printing and all the money printed and in circulation in the United States has been printed in the last 24 months. That's a really scary statistic. And I just know that these are the things that ultimately, when you do that, people are losing confidence in our dollar. And what happens is that's what drives the U.S. Treasury bonds up, because they have to give a better return to give people confidence to be able to invest in them. And then ultimately, the 10-year Treasury is what the mortgage rates are connected to. That's why the federal funds rate doesn't have to go up a lot. The mortgage rates are going up, right? And so that's a scary thing. And so there is a chance mortgage rates could be 6 to 8% in the next couple of years. And if that happens, it would just be common sense that prices have to come down. But once again, until the supply catches up to the demand, we're not going to see a big correction in prices. And then eventually the supply will catch up. And with higher rates, I think we're going to see at some point in time a very, very significant correction in the real estate market. The problem is we don't know when, and nobody's going to be able to time it. My assessment of this, I guess is the best way to put it, is that it's not going to be in 2022. It's not going to be in 23 because I don't see them being able to make up a 900,000 home inventory gap for the MLS in a year. So I don't think it'll be in 23. It might slow down significantly, but I don't see a massive correction happening in that time because once again, the supply doesn't match up for it. 2024, 2025, obviously the jury's out on what will happen, but I just wanted to share this with you because it's a really, really important thing to understand. And if you're not taking the supply demand component of real estate into the equation, which we haven't had to worry about for the past 40 years since, the late 70s, we haven't had to worry about this issue, but it is absolutely a huge economic factor that comes into the pricing of real estate in this country. So hope that makes sense. If you have any questions, leave them in the comment section below. If you haven't already, make sure you subscribe, hit the bell, that way you get notified every time I launch a new video. Also check me out on TikTok at Real Chris Kirkpatrick for more of my short content. And that's it for now. Until next video, have a blessed, inspirational day. We'll talk soon. See ya.